Question 1. Which of the following is a primary characteristic of a managed care plan (MCPA)? The plan offers complete flexibility in choosing healthcare providers without restrictions. B. The plan requires members to select a primary care physician (PCP) and get referrals for specialty care. C. The plan reimburses all medical expenses with no cost-sharing requirements. D. The plan covers only emergency medical services within the network. Answer: B. The plan requires members to select a primary care physician (PCP) and get referrals for specialty care. Explanation: Managed care plans (MCPS), such as health maintenance organizations, HMOS, and preferred provider organizations (PPOS), often require enrollees to select a primary care physician (PCP) to coordinate their care. Members usually need referrals from their PCP before seeking care from specialists. This system is designed to control costs by ensuring that care is provided in a structured and monitored manner. The other options do not accurately describe the limitations and structures of MCPS. Option A describes more of an indemnity plan where members can visit any healthcare provider they choose. Option C is incorrect because cost sharing is common in MCPS. Option D does not apply to the broader range of services covered under MCPS, which include more than emergency care. Question 2. Emily is looking for a health insurance plan that allows her to choose any doctor or hospital without needing a referral while keeping premiums lower. Which of the following types of plans should she consider? A. Health maintenance organization (HMO). B. Preferred provider organization (PPO). C. High deductible health PHSP. D. Health savings account (HSA). Answer: B. Preferred provider organization (PPO). Explanation: a preferred provider organization (PPO) offers more flexibility than HMO by allowing members to visit any healthcare provider without the need for a referral. While PPOS typically have higher premiums than HMOS, they still provide an affordable choice with lower premiums than some other plans. Option A, HMO, requires selecting a primary care physician and obtaining referrals for specialist care. Option AHP features a higher deductibles and lower premiums, but does not focus on the flexibility of choosing providers. Option D, HSA, is not a plan itself, but a tax-advantaged savings account that works in conjunction with SHRI. Question 3 scenario: Mr. Williams, who is 64 years old, has been receiving care under his employer's group health insurance. His employer's group plan is ending, and Mr. Williams is not yet eligible for Medicare. He needs to find alternative coverage. Which of the following options would provide him with the most appropriate solution? A. He should apply for short-term health insurance plan. B. He should seek coverage through the Wisconsin Medicaid program. C. He should explore the health insurance marketplace for coverage options. D. He should apply for high deductible health PHSP with NHSA. Answer: C. He should explore the health insurance marketplace for coverage options. Explanation: Since Mr. Williams is not yet eligible for Medicare and his employer's group health insurance is ending, his best option is to explore the health insurance marketplace for coverage options. The marketplace provides various plans that can be suitable for people in his situation, including those with pre-existing conditions. Short-term health insurance, option A, is not ideal as it provides limited coverage and could be expensive. Wisconsin Medicaid, option B, may not be available to him unless his income qualifies, as Medicaid generally covers low-income individuals, and Mr. Williams may not meet the eligibility criteria. High deductible health PHSP option D, paired with an HSA, can be beneficial for some, but it may not be the best option for someone approaching Medicare age who needs comprehensive coverage. Question 4. Which of the following is a characteristic of a health savings account? A. TESA. Contributions to an HSA are subject to income tax. B. TESA funds can only be used for medical expenses and cannot be withdrawn for other purposes. C. HSA contributions are tax deductible and withdrawals for qualified medical expenses are tax-free. D. HSA funds must be used within 1 year or they will be forfeited. Answer: E. HSA contributions are tax deductible and withdrawals for qualified medical expenses are tax-free. Explanation: Health savings accounts (HSAs) provide tax advantages, contributions are tax deductible, and withdrawals for qualified medical expenses are tax-free. This makes HSAs an attractive option for individuals enrolled in high deductible health plan. HSA is incorrect because HSA contributions are tax deductible. Option B is misleading because HSA funds can be used for other purposes, but withdrawals for non-medical expenses are subject to tax and penalties before age 65. Option D is also incorrect because HSA funds roll over year to year, unlike flexible spending accounts (FSAS), which have a use it or lose it policy. Question 5. Which of the following is true regarding the Affordable Care Act account and its impact on pre-existing conditions? A. The account allows insurers to deny coverage for individuals with pre-existing conditions. B. The account requires insurers to cover individuals with pre-existing conditions, but they can charge higher premiums. C. The account prohibits insurers from denying coverage or charging higher premiums due to pre-existing conditions. D. The account allows insurers to deny coverage for pre-existing conditions for individuals under 30 years of age. Answer: C. The account prohibits insurers from denying coverage or charging higher premiums due to pre-existing conditions. Explanation: under the account, insurers are prohibited from denying coverage or charging higher premiums based on pre-existing conditions. This is a key provision of the account that ensures individuals cannot be discriminated against due to their medical history. Option A is incorrect because the account specifically prevents denial based on pre-existing conditions. Option B is partially correct, but it is not allowed to charge higher premiums based solely on pre-existing conditions under the account. Option D is incorrect because the account applies this protection to all ages, not just to individuals under 30. Question 6. Scenario: Mr. Thompson, a 55-year-old employee, is considering whether to enroll in his employer's group health insurance plan or purchase coverage through the health insurance marketplace. His employer offers plan with high premium but low deductible, while the marketplace offers plans with lower premiums but higher deductibles. What should Mr. Thompson consider when deciding which plan to choose? A. He should choose the marketplace plan, as it will likely save him money on premiums regardless of the deductible. B. He should compare the total cost of the plans, including premiums, deductibles, and out-of-pocket costs for expected healthcare needs. C. He should choose his employer's plan since it is likely to have better coverage and fewer out-of-pocket expenses. D. He should avoid marketplace plans since they may not be as comprehensive as employer-sponsored plans. Answer: B. He should compare the total cost of the plans, including premiums, deductibles, and out-of-pocket costs for expected healthcare needs. Explanation: when deciding between employer-sponsored insurance and her marketplace plan, Mr. Thompson should consider the total cost of coverage, which includes premiums, deductibles, copies, and potential out-of-pocket costs. This will give him a comprehensive view of how much he will pay overall based on his healthcare needs. Option A is incorrect because the lower premiums of a marketplace plan may be offset by higher out-of-pocket costs. Option C may not always be true, as the employer plan could still be costly due to the high premium. Option D is incorrect because many marketplace plans offer comprehensive coverage, and it is worth comparing these plans to employer-sponsored options. Question 7. Which of the following is a requirement for an individual to qualify for Medicare? A. The individual must be at least 50 years old and not have employer-sponsored health coverage. B. The individual must be a U.S. citizen or legal resident and have worked at least 10 years paying Medicare taxes. C. The individual must have a disability but does not need to meet any work history requirements. D. The individual must be enrolled in Medicaid before applying for Medicare. Answer: B. The individual must be a U.S. citizen or legal resident and have worked at least 10 years paying Medicare taxes. Explanation: to qualify for Medicare, individuals must be U.S. citizens or legal residents who have worked for at least 10 years and paid Medicare taxes during that time. This ensures they are eligible for premium-free PAR coverage. Option A is incorrect because age 65, not 50, is the general eligibility age, and having employer coverage does not disqualify someone from Medicare eligibility. Option C is misleading. While individuals under 65 may qualify for Medicare if they have certain disabilities, they still must meet specific work history or disability requirements. Option D is incorrect because individuals can qualify for Medicare independently of Medicaid. Question 8. Under the Wisconsin Medicaid program, which of the following individuals is likely to be eligible for benefits? A. A 30-year-old non-pregnant adult with no children who earns 100% of the federal poverty level. B. A 40-year-old single parent who earns 120% of the federal poverty level and is employed full-time. C. A 65-year-old individual with a monthly income of $2,000 who does not qualify for Medicare. D. A 55-year-old individual with a disability who earns 200% of the federal poverty level. Answer A. A 30-year-old non-pregnant adult with no children who earns 100% of the federal poverty level. Explanation: Wisconsin Medicaid, through its BadgerCare program, generally provides coverage for low-income individuals, including adults without dependent children who meet income eligibility thresholds. A 30-year-old earning 100% of the federal poverty level qualifies for benefits. Option B is incorrect because a 40-year-old earning 120% of the federal poverty level may not meet Medicaid eligibility requirements. Option C is incorrect because the income for a 65-year-old is above the eligibility limit for Medicaid in Wisconsin unless they qualify for additional benefits like Medicare savings programs. Option D is incorrect because an individual earning 200% of the federal poverty level would likely be ineligible for Medicaid but could be eligible for subsidies through the health insurance marketplace. Question 9. Which of the following is a feature of a group health insurance plan that is typically not found in individual health insurance plans? A. Group health insurance plans are guaranteed issue, meaning coverage cannot be denied based on pre-existing conditions. B. Group health insurance plans typically have low premiums due to the larger risk pool. C. Group health insurance plans allow for individual choice in the level of coverage. D. Group health insurance plans have a cap on the total benefits provided in a year. Answer. B. Group health insurance plans typically have low premiums due to the larger risk pool. Explanation. Group health insurance plans benefit from risk pooling, which means they cover a large number of individuals, resulting in lower premiums compared to individual health insurance plans. Option A is incorrect because group plans cannot deny coverage for pre-existing conditions due to federal regulations, but individual plans may have more restrictions. Option C is incorrect because group health insurance plans typically offer a set menu of coverage options, whereas individual plans allow more flexibility. Option D is incorrect because most group health insurance plans do not have annual benefit caps under the Affordable Care Act. Question 10. Which of the following is true regarding the Children's Health Insurance Program? CHIP. A. CHIP only provides coverage to children of unemployed parents. B. CHIP is available to children and, in some cases, pregnant women whose family income is too high for Medicaid but too low to afford private insurance. C. CHIP is a federal program that does not vary between states. D. CHIP requires families to pay 50% of the healthcare costs for their children. Answer. B. CHIP is available to children and, in some cases, pregnant women whose family income is too high for Medicaid but too low to afford private insurance. Explanation. CHIP is a joint federal and state program that provides health coverage to children in families whose income is too high to qualify for Medicaid but too low to afford private insurance. Option A is incorrect because CHIP is available to families based on income, not employment status. Option C is incorrect because CHIP programs vary by state, including eligibility requirements and benefits. Option D is incorrect because families do not pay 50% of healthcare costs under CHIP. The costs are generally low, with some states charging premiums or copies based on income. Question 11. Which of the following health insurance plans is designed to cover the costs of long-term care? A. Short-term health insurance. B. Disability insurance. C. Long-term care insurance. D. Critical illness insurance. Answer. C. Long-term care insurance. Explanation. Long-term care insurance is designed to cover services that assist with daily living activities such as bathing, dressing, and eating when a person is no longer able to perform these tasks due to aging, illness, or disability. Option A is incorrect because short-term health insurance is temporary and provides coverage for a limited period. Option B refers to disability insurance, which replaces income when an individual is unable to work due to illness or injury, but it does not cover long-term care. Option D is incorrect because critical illness insurance provides coverage for specific serious health conditions, not long-term care. Question 12 scenario. Samantha is 27 years old and is considering her options for health insurance. She is in good health and has minimal healthcare needs. Which of the following plans is likely to be the most affordable option for her? A. A health maintenance organization, HMO plan with a low deductible and limited provider network. B. A preferred provider organization, PPO, plan with higher premiums but a broad provider network. C. A high deductible helper AHP paired with a health savings account, HSA. D. A point of service pass plan with moderate premiums and a moderate provider network. Answer. C. A high deductible helper AHP paired with a health savings account, HSA. Explanation. A high-deductible helper age paired with an HSA are typically the most affordable option for someone like Samantha, who is young and healthy with minimal healthcare needs. Asia have low premiums but higher deductibles, and the HSA allows her to save for future medical expenses with tax advantages. Option A could be a good choice, but it may not offer the cost savings that AHP can. Option B is likely to be more expensive due to the higher premiums associated with EPO plans. Option D is a compromise option, but it may not offer the best value for someone with minimal healthcare needs. Question 13. Which of the following is an advantage of using an HSA? Health savings account. A. HSA funds must be used within the calendar year or they will be forfeited. B. Contributions to an HSA are tax deductible and withdrawals for qualified medical expenses are tax-free. C. HSA funds cannot be invested in stocks, bonds, or mutual funds. D. Only individuals with employer-sponsored health insurance are eligible to own an HSA. Answer. B. Contributions to an HSA are tax-deductible and withdrawals for qualified medical expenses are tax-free. Explanation. One of the major advantages of an HSA is that contributions are tax-deductible and withdrawals for qualified medical expenses are tax-free. Additionally, the funds in an HSA roll over from year to year and can be invested in stocks, bonds, or mutual funds. Option A is incorrect because HSA funds roll over year to year, unlike flexible spending accounts (FSAS). Option C is incorrect because HSA funds can be invested in various investment vehicles, such as stocks and mutual funds. Option D is incorrect because individuals with high deductible health PSHA are eligible for HSAS, whether they have employer-sponsored coverage or. Question 14. Which of the following is not a required element of a valid life insurance policy? A. A beneficiary designated by the policyholder. B. A written application signed by the policyholder. C. A medical exam for all applicants. D. A premium amount specified in the policy. Answer. C. A medical exam for all applicants. Explanation. While some life insurance policies may require a medical exam, it is not a mandatory requirement for all policies. Many policies, especially for smaller amounts of coverage or for younger, healthier individuals, may not require a medical exam. Option A, B, and D are all required elements of a valid life insurance policy. The policy must specify the beneficiary, include a signed application, and specify the premium amount. Question 15. Which of the following statements about the Affordable Care Act (ACA) is true? A. The ACA allows insurance companies to deny coverage to individuals with pre-existing conditions. B. The ACA requires individuals to purchase insurance through their employer if they are eligible for employer-sponsored coverage. C. The ACA expanded Medicaid eligibility to include more low-income individuals in participating states. D. The ACA requires all individuals to purchase health insurance regardless of income. Answer. C. The ACA expanded Medicaid eligibility to include more low-income individuals in participating states. Explanation. The ACA expanded Medicaid eligibility to include more low-income individuals, allowing more people to access health insurance in participating states. Option A is incorrect because the ACA specifically prohibits insurers from denying coverage based on pre-existing conditions. Option B is incorrect because the ACA does not mandate that individuals must purchase insurance through their employer. Option D is incorrect because the ACA includes a requirement to purchase insurance only for those who do not have access to affordable coverage through other means, and the individual mandate penalty has been reduced to $0 in many states. Question 16. Which of the following best describes a preferred provider organization PPO insurance plan? A. PPO plans have a narrow network of doctors and hospitals and require referrals for specialist care. B. PPO plans allow members to visit any doctor or specialist without a referral and typically have higher premiums. C. PPO plans require a primary care physician and do not cover out-of-network care. D. PPO plans only cover emergency care outside the network. Answer. B. PPO plans allow members to visit any doctor or specialist without a referral and typically have higher premiums. Explanation. PPO plans offer flexibility by allowing members to see any doctor or specialist without a referral, and they generally have higher premiums than other plans like HMOs. Option A is incorrect because PPO plans are not limited to a narrow network and do not require referrals. Option C is incorrect because PPOs do not require a primary care physician (PCP). Option D is incorrect because PPO plans cover out-of-network care that are a higher cost to the member. Question 17. Which of the following is A feature of a high-deductible health AHPA has low premiums and high deductibles. B. It covers all medical expenses immediately after a copayment. C. It does not cover any preventive care services. D. It requires a lower out-of-pocket maximum than other plans. Answer A. It has low premiums and high deductibles. Explanation. A high-deductible health AHP is characterized by having low premiums and high deductibles. This can make it an affordable option for individuals who do not expect to have high medical costs. Option B is incorrect because THP require individuals to pay the full deductible before coverage kicks in for most services. Option C is incorrect because THPs cover preventive care services without charging a deductible. Option D is incorrect because THPs often have a higher out-of-pocket maximum than other plans. Question 18. What is the primary purpose of the annual open enrollment period for health insurance? A. To allow individuals to cancel their insurance without penalty. B. To allow individuals to apply for health insurance for the first time. C. To allow individuals to change their health insurance plans or enroll in a new plan. D. To allow individuals to apply for Medicaid. Answer. C. To allow individuals to change their health insurance plans or enroll in a new plan. Explanation. The annual open enrollment period for health insurance allows individuals to switch plans, enroll in a new plan, or make changes to their existing coverage. Option A is incorrect because open enrollment is not for cancelling insurance. Option B is incorrect because individuals can apply for health insurance outside the open enrollment period if they qualify for a special enrollment period, e.g., due to a qualifying life event. Option D is incorrect because Medicaid enrollment is not tied to the open enrollment period. Individuals can apply for Medicaid at any time. Question 19. Which of the following is not considered a mandatory benefit that health insurance plans must cover under the Affordable Care Act? A. Maternity and newborn care. B. Mental health and substance use disorder services. C. Cosmetic surgery. D. Prescription drugs. Answer. C. Cosmetic surgery. Explanation. Under the ACA, insurance plans must cover essential health benefits including maternity care, mental health services, and prescription drugs. Cosmetic surgery is not a mandatory benefit unless it is medically necessary due to an injury or illness. Option A, B, and D are mandatory benefits under the ACA. Question 20. Which of the following health insurance types typically covers the costs of dental and vision care? A. Major medical insurance. B. Health maintenance organization, HMO. C. Standalone dental and vision plans. D. Preferred provider organization, EPA. Answer. C. Standalone dental and vision plans. Explanation. Standalone dental and vision plans specifically cover the costs associated with dental and vision care. Major medical plans, HMOs and PPOS, may offer limited dental and vision benefits, but they are generally not the primary source of coverage for these services. Question 21. Scenario. Jake, a 30-year-old healthy individual, is evaluating his insurance options. He is looking for the lowest possible premium. Which of the following types of plans should Jake consider? A. Health maintenance organization, HMO. B. Preferred provider organization, EPO. C. High deductible health per with a health savings account, HSA. D. Point of service POS plan. Answer. C. High deductible health per with a health savings account, HSA. Explanation. Jake should consider an AHP pair with NHA at low A premiums, and the HSA provides tax advantages for saving and spending on healthcare costs, while a HMO option A typically has low premium. HSAs are often the most affordable choice for someone who does not expect frequent medical visits. PPOS option B tend to have higher premiums. POS plans option D offer moderate premium. HSAs would likely provide the best cost savings. Question 22. Which of the following best describes a catastrophic health insurance plan? A. A plan with low premiums and high deductibles that provides coverage for essential health benefits. B. A plan with high premiums and low deductibles, mainly used by high-income individuals. C. A plan that covers only preventive care and does not provide coverage for other medical expenses. D. A plan that provides coverage for all health conditions and medications without any cost sharing. Answer A. A plan with low premiums and high deductibles that provides coverage for essential health benefits. Explanation. Catastrophic health insurance plans are designed for young, healthy individuals who want to protect themselves in case of major medical emergencies. They offer low premiums and high deductibles, covering essential health benefits only after the deductible is met. Option B is incorrect because it describes a plan with high premiums, which is not characteristic of a catastrophic plan. Option C is incorrect because catastrophic plans provide more than just preventive care. Option D is incorrect because catastrophic plans still involve cost sharing, especially for routine care. Question 23 was a waiting period in health insurance. The time an individual must wait before their policy becomes active. B. The period during which an individual can cancel their policy without penalties. C. The time between when the insurer receives a claim and when it is paid out. D. The time an individual must wait before they can file a claim. Answer A. The time an individual must wait before their policy becomes active. Explanation. A waiting period refers to the time between when a person signs up for a health insurance policy and when the coverage begins. Waiting periods can apply to specific types of coverage, such as maternity benefits or pre-existing conditions. Option B is incorrect because it refers to cancellation, not activation. Option C describes the claims process, while option D refers to the claims waiting period, not policy activation. Question 24. Which of the following describes a coinsurance arrangement in health insurance? A. The fixed amount a policyholder must pay for covered healthcare services before the insurance starts paying. B. The portion of the medical bill that the policyholder pays after meeting the deductible, typically a percentage. C. A fixed amount that the policyholder pays for each doctor visit or prescription. D. The total annual amount a policyholder must pay before the insurance pays 100% of the medical costs. Answer B. The portion of the medical bill that the policyholder pays after meeting the deductible, typically a percentage. Explanation. Coinsurance is the percentage of the cost of a covered healthcare service that the policyholder is required to pay after meeting their deductible. For example, a policyholder might pay 20% of the cost of a doctor visit while the insurer pays the remaining 80%. Option A describes a deductible, not coinsurance. Option C describes a copayment. Option D refers to the out-of-pocket maximum. Question 25. What does the term out-of-pocket maximum mean in health insurance? A. The total amount an individual pays for healthcare services in a given year, including premiums and copayments. B. The maximum amount the insurer will pay for any single medical treatment. C. The highest monthly premium a policyholder must pay for health insurance. D. The most an individual will have to pay in a plan year before the insurer covers 100% of covered expenses. Answer D. The most an individual will have to pay in a plan year before the insurer covers 100% of covered expenses. Explanation. The out-of-pocket maximum is the total amount a policyholder must pay for covered health services in a plan year, including deductibles, copayments, and coinsurance before the insurance covers 100% of additional covered expenses. Option A is incorrect because it includes premiums which are not part of the out-of-pocket maximum. Option B refers to a limit on a single treatment, which is not the same as the out-of-pocket maximum. Option C refers to premiums, not out-of-pocket costs. Question 26. Which of the following health insurance types is typically the most restrictive in terms of provider choice? A. Health Maintenance Organization, ATEMO. B. Preferred Provider Organization, EPO. C. High Deductible Health, PACHP. D. Point of Service, POS plan. Answer A. Health Maintenance Organization, ATEMO. Explanation. Health maintenance organizations, HMOs, typically have the most restrictive provider networks and require members to choose a primary care physician PCP and obtain referrals for specialist care. PPOS and POS plans offer more flexibility in choosing provider. THEs are not restrictive in provider choice but focus on cost-sharing aspects. Question 27 scenario. Maria recently found out she has a medical condition that will require frequent treatments. She needs a plan that allows her to visit specialists without a referral. Which of the following plans would be best for her? A. Health Maintenance Organization, HMO. B. High Deductible Health, PACHP. C. Preferred Provider Organization, EPO. D. Exclusive Provider Organization, EPO. Answer C. Preferred Provider Organization, PPO. Explanation. A POPN would be the best choice for Maria because it allows her to visit specialists without a referral, providing greater flexibility. HMO plans typically require referrals for specialist care. AHEs are good for those who do not expect frequent medical treatment. They are not focused on ease of access to specialists. EPOS are similar to PPOS but with a more limited network of providers. Question 28. Which of the following would be an example of a preventive health service covered by insurance plans? A. Surgery to treat a broken leg. B. Vaccinations to prevent diseases. C. Emergency room visit for chest pain. D. Treatment for a chronic illness like diabetes. Answer. B. Vaccinations to prevent diseases. Explanation. Preventive health services are designed to prevent illness or detect it early, often before symptoms appear. Vaccinations are considered preventive care because they help prevent diseases. Surgery, option A, emergency care, option C, and chronic illness treatments, option D, are not considered preventive. Question 29. Which of the following is typically a feature of a health savings account? HSA paired with the high deductible Help AISH. The HSA funds are taxed when withdrawn from medical expenses. B. The HSA allows funds to roll over from year to year. C. Contributions to the HSA are made by the insurance company. D. HSA funds can only be used for dental and vision expenses. Answer. B. The HSA allows funds to roll over from year to year. Explanation. One of the key features of an HSA is that the funds roll over from year to year and do not expire. This means that the money in the account accumulates and can be used for future medical expenses. Option A is incorrect because HSA withdrawals for qualified medical expenses are tax-free. Option C is incorrect because HSA contributions are made by the account holder, not the insurance company. Option D is incorrect because HSA funds can be used for a wide range of medical expenses, not just dental and vision. Question 30. Which of the following is a key benefit of having a preferred provider organization (PPO) plan? A. Lower premiums compared to health maintenance organization (HMO) plans. B. Greater flexibility in choosing healthcare providers, including specialists. C. No need to choose a primary care physician (PCP). D. Coverage limited to only in-network providers. Answer. B. Greater flexibility in choosing healthcare providers, including specialists. Explanation. PPO plans offer greater flexibility compared to HMO plans. Members can visit specialists and out-of-network providers without needing a referral or approval from a primary care physician (PCP). While PPOS generally have higher premiums than HMOs, the key benefit is the ability to choose healthcare providers with less restriction. Option A is incorrect because PPOS typically have higher premiums than HMOs. Option C is incorrect because although PPO members do not need this is not the primary defining feature. Option D is incorrect because PPOS allow members to use out-of-network providers, albeit at a higher cost.